Greetings, fellow financial adventurers. Welcome to our channel Snap Savings, your fortress of financial wisdom.
Did you know that over 70% of Americans have used a loan at some point in their lives? In today's world, loans are a common financial tool. Millions of people use loans to achieve their dreams. They buy homes, start businesses, or cover unexpected expenses. Understanding how loans work is crucial for financial success. It empowers you to make informed decisions. Remember, knowledge is power. Loans provide access to funds you might not have immediately. This can be a game changer. Imagine buying your dream home or investing in your education. Loans make these aspirations achievable, but it's essential to borrow responsibly. Carefully evaluate your needs and repayment capacity before taking on debt. Borrowing wisely can help you build a strong financial future. It can improve your credit score and open doors to better financial opportunities. However, irresponsible borrowing can lead to financial stress. It's crucial to strike a balance and borrow only what you can afford to repay. Remember, a loan is a tool. Use it wisely. Before you apply for a loan, it's crucial to understand the basics. This includes knowing the different types of loans available. You should also be aware of eligibility criteria and the application process. A little research goes a long way in securing the right loan for your needs. Start by understanding your financial situation. Evaluate your income, expenses, and existing debts. This will help you determine how much you can afford to borrow. Remember, taking on more debt than you can handle can lead to financial difficulties. Next, research different lenders and loan options. Compare interest rates, loan terms, and repayment options. Don't be afraid to negotiate with lenders to get the best possible deal. Remember, knowledge is power when it comes to borrowing money. Knowing your financial capacity and exploring different loan options are key. This preparation empowers you to make informed borrowing decisions. It's about aligning your financial goals with responsible borrowing practices. So, do your homework before you commit. Loans come in various forms, each tailored for a specific purpose. Understanding these types is crucial for choosing the right loan. Let's explore some common types of loans and their uses. Personal loans are versatile and can be used for various purposes. Debt consolidation, home improvements, or unexpected expenses are some examples. They typically have fixed interest rates and repayment terms. Mortgages are specifically designed for purchasing a home. These loans typically have longer repayment terms. They often come with lower interest rates compared to other loan types. Auto loans, as the name suggests, are for buying vehicles. The car usually serves as collateral for the loan. Repayment terms vary depending on the loan amount and your creditworthiness. Student loans help finance education expenses. They often have favorable terms, including lower interest rates and flexible repayment options. Business loans are for entrepreneurs and businesses. They provide capital for starting or expanding a business. These loans may require a detailed business plan and financial projections. Before you apply for a loan, it's crucial to determine your eligibility. Lenders consider several factors when evaluating loan applications. Understanding these factors can increase your chances of approval. Credit score plays a vital role in loan eligibility. Lenders use it to assess your creditworthiness. A higher credit score generally translates to better loan terms and interest rates. Income is another crucial factor that lenders consider. They want to ensure you have the financial capacity to repay the loan. Stable and sufficient income increases your eligibility. Debt-to-income ratio, DTI, is the percentage of your gross monthly income that goes towards debt payments. Lenders prefer borrowers with a lower DTI, indicating a healthy financial standing. Employment history demonstrates your financial stability and ability to repay the loan. Lenders often prefer borrowers with a stable employment record. Collateral is an asset that secures the loan. It acts as a guarantee for the lender in case of default. Having collateral can increase your chances of loan approval. Section 5. The loan application, your roadmap to success. The loan application process may seem daunting, but it's manageable with the right approach. Here's a step-by-step guide to help you navigate through it successfully. Start by gathering all the necessary documents. This may include proof of income, bank statements, and identification. Having these documents ready will streamline the application process. Fill out the application form accurately and completely. Double-check all the information before submitting it. Any errors or omissions can delay the approval process. Be prepared to provide additional documentation if requested. Lenders may ask for supporting documents to verify the information provided in your application. Review and understand the loan terms before accepting the offer. Pay attention to the interest rate, repayment terms, and any associated fees. Once you've accepted the loan offer, sign the agreement and fulfill any remaining requirements. Congratulations, you've successfully secured your loan. Section 6, Credit Scores. Your financial report card. Your credit score is a numerical representation of your creditworthiness. It's like a financial report card that lenders use to assess your credit risk. Understanding credit scores is essential for securing favorable loan terms. Credit scores typically range from 300 to 850. A higher score indicates lower credit risk. Payment history, credit utilization, and length of credit history are some factors influencing your score. Payment history is crucial for maintaining a good credit score. Make all your debt payments on time, including credit card bills, loans, and utilities. Credit utilization refers to the amount of credit you use compared to your total available credit. Keeping your credit utilization low demonstrates responsible credit management. The length of credit history matters. A longer credit history with positive payment behavior generally results in a higher credit score. Your credit score is a valuable asset. Monitor it regularly, check for errors, and take steps to improve it over time. Section 7. Boosting your creditworthiness. Building and maintaining good credit takes time and effort. However, the rewards are worth it. Here are some tips to improve your creditworthiness and access better loan options. Pay your bills on time, consistently. Set reminders or automate payments to avoid late fees and negative marks on your credit report. Keep your credit card balances low. High credit utilization can negatively impact your credit score. Strive to keep your balances below 30% of your available credit limit. Avoid opening too many credit accounts in a short period. Each new credit application can potentially lower your credit score. Review your credit report regularly for errors. Dispute any inaccuracies with the credit bureaus to ensure your credit report reflects your true credit history. Consider becoming an authorized user on a responsible family member's credit card. This can help you build credit history if you're new to credit. Loan applications can be tricky, and even small mistakes can lead to rejection. Here's a look at some common pitfalls to avoid. Applying for too many loans in a short time can raise red flags for lenders. Each application triggers a hard inquiry on your credit report, potentially lowering your score. Incorrect or incomplete information on your application can lead to delays or rejection. Double-check all details before submitting your application. Having a low credit score or a high debt-to-income ratio can hurt your chances of approval. Focus on improving your creditworthiness before applying for a loan. Ignoring the fine print and not understanding the loan terms can lead to financial surprises later. Read the loan agreement carefully and ask questions if anything is unclear. Missing deadlines or failing to provide requested documentation can derail your application. Be organized, responsive, and meet all the lender's requirements promptly. Understanding the true cost of borrowing is crucial. It's not just about the loan amount. Interest rates and fees play a significant role. Interest rates determine the cost of borrowing money. A lower interest rate means you'll pay less over the life of the loan. Shop around and compare rates from different lenders. Annual percentage rate, APR, provides a more comprehensive view of the loan's cost. It includes the interest rate and other fees associated with the loan. Origination fees are charged by lenders for processing and underwriting the loan. These fees are typically a percentage of the loan amount and are deducted from the loan proceeds. Late fees are penalties for missing a loan payment. Avoid late fees by setting reminders and making payments on time. Prepayment penalties are charges for paying off your loan early. While not all loans have this fee, it's essential to check if it applies to your loan. Congratulations on getting your loan approved. Here's what you can expect after approval and tips for managing your loan responsibly. Once approved, you'll receive a loan agreement outlining the terms and conditions. Review it carefully and ask questions if anything is unclear. Funds are typically dispersed within a few business days after signing the agreement. Ensure you understand the disbursement process and any associated fees. Set up automatic payments or reminders to avoid missing payments. Timely payments help build a positive credit history and prevent late fees. Create a budget that includes your loan payments. Track your spending and ensure you have enough funds to cover your loan obligations. If you encounter financial difficulties, contact your lender immediately. They may offer options like deferment or forbearance to help you through tough times. Remember, loans are financial tools. Used wisely, they can help you achieve your dreams and build a secure financial future. Make informed decisions, borrow responsibly, and enjoy the benefits of financial leverage. Prioritize your financial well-being by making timely payments and managing your debt responsibly. This will contribute to a healthy credit history and open doors to better financial opportunities in the future. Always remember, knowledge is power when it comes to personal finance. Continue to educate yourself about loans, interest rates, and responsible borrowing practices. By mastering the art of loan acquisition, you can unlock your financial power and pave the way for a brighter financial future. Borrow smart, live better, and achieve your financial goals with confidence.
Don't forget to like, share, and subscribe for more profound insights into mastering your financial journey.